Good morning, happy Friday. This is the morning grain comments from Chicago and USDA report day. Volume has been subdued. A lot of the markets are trading sideways. The bulls doubt that we can rally much, considering that we have some large supply of grain out of Russia, out of Brazil, and tempered global demand. And the bears doubt we can break much because of all the uncertainty in the Black Sea and the exports out of the Black Sea. Russia also somewhat of an uncertainty, plus the fact that U.S. farmers are not selling grain, and here in the U.S. Soybean and corn crush margins are positive. Again, the one thing that limits the upside in the grains continues to be slow export demand. When we look at prices, soybeans right now up about 6 cents in the November. Corn is unchanged. Chicago wheat's down 2 cents. U.S. stocks looks like they're going to open up a little bit lower. The dollar's unchanged, and crude oil is up a little bit. Again, overnight, U.S. President said that the China economy is a ticking time bomb. This distances U.S. and China more as far as relationships. We have noted that China continues to buy large quantities of beans with their crush margins positive, and meal in Dalian making new contract highs daily. They've also a lot of conversation about the flooding in the north. It's not expected to be a major problem, and we really don't know for sure, but we'll be watching China's import buying, especially if they buy from the U.S., to get us a kind of an idea of how much crops they may have lost due to flooding. We also note that today's the USDA report day, and I think that they could raise the carryouts here old crop because of lower export demand. They may not change yields that much, although crop ratings continue to be on the low side historically. And then we'll see what they do to U.S. and global supply and demand numbers. After that, I think we'll trade weather. The 8 to 14 day weather map in the U.S. is warm and dry. Yesterday at noon, the maps had some kind of ridging across the Midwest. They've kind of tempered that in the next two weather runs that we've had since then. But next week it will be warmer and drier across the Midwest. I don't think that hurts corn any more than where we are right now. And I think for the bean market, some areas need to dry out, while others could use rain after this warm and dry weather pattern. We also notice the low water levels is slowing trade through the Panama Canal. We're not sure exactly how that impacts anything, but right now, logistically, Brazil is satisfying China with their corn and soybean needs. We also noted that this week's U.S. wheat export sales were better than expected. We're still behind last year, but U.S. soft wheat prices are competitive now to Europe and to the Black Sea. So we'll be watching pretty closely to see the market reaction and then go from there.